Hi everyone, welcome to Primary Market Chatter, brought to you by Sunday Investing. This is the December first week IPOs edition. We'll be talking about five SMEs today. There are quite a few IPOs next week. So what we'll be doing is we'll be doing this in two parts. First part में पांच SME cover करेंगे and then second half में जो remaining companies है उनकी बात करेंगे. So today we'll be talking about Exato, we'll be talking about Ravel, we'll be talking about Invicta Diagnostics, Purple Wave Infocom and Logiciel. Yeah, but before we get started, just want to thank everyone for joining. This is our new account through which we'll be doing all the spaces. So if you haven't followed the Sunday Investing account, go ahead and do that. And a couple of housekeeping news is to begin the day. First, as I always say, we are not SEBI registered research analyst. None of our opinion is qualified. Definitely do your own due diligence. आप अपना due diligence खुद से करें and उसके basis पे decision लें. We also apply to IPOs. So think of only like what we are planning to do with our strategy. This is only that show. We can be completely wrong. We are also wrong multiple times, which you would have seen during the last 2 years of us doing this, 1.5 years of us doing this. So don't go by what we are saying. Just think of it as what we like. Some people are planning to do with their IPO strategy. And we also have conflicting biases as well. Now I also run a fund which quite a few of you know. It's like we also have AIF live. So we might have positions in that AIF as well. So definitely consider that and do not take anything as a qualified opinion. This is more of just what we feel about the fundamentals of a company, what we have read, and this is more about just dissipating that information and talking to each other and understanding more about the companies. I really like the space simply because this is one thing where we just learn everything about what is going to come about the next week IPOs. So it has helped me grow a lot per se. Second thing, if you are not on our YouTube channel, go ahead and follow us on YouTube. We are also on Instagram, so go ahead and follow us on Instagram as well. I'll try and post the link here in a couple of minutes. In the meanwhile, this is the new profile through which we'll be doing most of our spaces and all communication through for Sunday Investing as well. So if you haven't joined us, go ahead and join us on Sunday Investing Twitter account as well. With that agenda for the day, we'll probably start with Purple Wave, then move to Logiciel, then Invicta, then Ravel, and then Exato. All five are SMEs, so expecting slightly less-ish crowd today. Rohit and Tanmay and Yash will also be out, so it will be Saurabh, Sachin and me who will be covering the companies. Good to see you back, Saurabh, after a long, long time. But yeah, maybe we'll start with Purple Wave. Just setting up Purple Wave for Sachin. Incorporated in 2007, companies engaged in the sale and integration of digital professional audio video equipment. The company also offers after-sales value-added services, including AMC for technical support, repair and maintenance service of AV infrastructure, etc. In terms of the IPO, it's a 31.5 crore IPO, all of which is a fresh issue. 31.5 crore का IPO है. Market cap 117 crores पे आ रहा है. रेवेन्यू की बात करें तो FY25 में कंपनी का टॉप लाइन 126 crores का है. पैट 9 crores का है. So coming at 13 times FY25 seems pretty cheap. FY26 का number देखते हैं, like what they have done, if I have written it right. And in terms of the LM is Smart Horizon Capital Advisors. So what is Sachin to talk about Purple Wave Infocom? I think this very similar company like this had came, it was called ProFX, not a couple of months back only.
Am I audible?
Yep.
All right. So this Purple Wave Infocom, so they are based out of Delhi and they were set up way back in 2007. But now only have they managed in the recent years to scale up to 100 CR plus revenues. So what they do is they specialize in providing these solutions for audio, video, and communication systems, like designing, installing, and maintaining all these systems, and for various clients, be it corporate, be it educational, government, and other clients as well. For the retail chains, etc. as well, they supply these components, which they combined all together. They call them project services. So the components that they provide includes LED walls, interactive flat panels, audio conferencing systems, they do all sorts of installation and integration for them, and after that they also supply also give AMC and maintenance for all of these components. So they are not into manufacturing. Whole of their business is asset light only. So they just focus on the integration, and from there on they provide all sorts of project services for designing and after maintenance services as well. They also are trying to develop some new components as well, like some experimental displays from a wide range of display. They are trying to capture from 21 inches to 86 inches as well, and they are also trying to make their own content as well to get it displayed on these flat panels and LED panels. And they are also making some paperless electronic systems. This is not in a short while, but maybe after 1 to 2 years or so. But that is in a development stage. What they do is for all of their manufacturing needs, they have good tie-ups, and they also have one subsidiary of their own only. So that does manufacturing for the components that are not available that are uh, made in India. For some components, they import it from China and Taiwan. So, and for others, they make it in-house whenever the needs arrive. If not, they are having good types with other players in this industry. So this in-house to the subsidiary of theirs, they for this subsidiary only they are trying to focus on doing more fabrication and in-house assembly work for the via this subsidiary for all of the projects that they are serving to various clients. So around 58 to 59% revenues comes from this integration of audio video systems design, where they design and implement all of these for various clients. The direct selling, which you can tell as trading of the components, that is around 37 to 38% of the revenues. It includes cameras, microphones, speakers, etc. And rest of the revenues is from those after sales and maintenance services. There are around 60% is direct business B2B clients. 31% of the revenues comes from direct to customer, and the rest 9 to 10% comes from government clients. So this is their revenue breakup. Now coming to their financials in FY23, they did 70 CR of revenues. The beta was quite low at that time because the clients and all did not get much scale. It was near 3 to 3.5%. In FY24, their margins got a good jump, around 9% they managed to do a beta, and around 90 CR they did in revenues. So this came by good number of clients that they added. Also they got help from raw material cost as well, which did rise, but not so much so that helped their margins to increase. And given that they onboarded more clients as well, so the more number of orders and to make all of these projects of audio, video, etc. And now coming to FY25, they did 126 CR of revenues with near 11% EBITDA and around 7% PAT margin. They also have given a financials till Q1 of FY26, where they did 36 CR of revenues, and the EBITDA got another push to around 14% EBITDA with 3.6 CR PAT, so around 10% PAT margin. And they are saying that these margins should sustain from here on and possibly increase to around 17 to 18% in not so short time, but in medium term. When their subsidy scales up to more fabrication and in-house assembly of these components. They also have some future plans to supply solar powered low screens as well for highways and broad roads. Also, they are making that paperless components and content for these displays as well. Now, some risks that I find in this business is working capital is key. So, because these margins that they are increasing, cash from operations is not supporting these margins, so that they need to cater to. Also, they are reliant on this trading of components as well, around 30 to 35% of the revenues. And so far, their geographical reach is only around those in the North India as well, around Delhi and nearby areas. Also, one risk I saw that they are importing some components from China and Taiwan. So, and already there is intense competition from be it import or be it supplying these type of project services. And now coming to the IPO usage, around 13 CR is for capital expenditure, where they are setting up one new office space to display more of their components to attract more clients to just get more visibility for their business. And around 10 CR is for repayment of their borrowings. So post IPO they should largely be debt free only and save some interest costs as well. And the IPO price is near 13 times FY25, and given what they are projecting, which is around 25 to 30% growth, it is probably near 10 times or below 10 times on FY26 also. One thing I saw that in the IHP, there was a share transfer from promoter to one HNI person in October only at around 46 rupees per share. So that is one thing to note. Also, for the peer, I think that ProFX, which recently came, is a good peer. Although different focus areas, ProFX is just into this audio video products and large home theater systems, whereas this company is making it more of a project based services to supply all sorts of audio video components and display panels as well. And ProFX is trading in the similar range, 11 to 12p on trailing basis, and probably below 10 times on forward basis as well. Lead manager here is Smart Horizon, okay to decent record. Anchor list was okay. CCB, Emerging Fund, Sunrise Investment, Pine Growth, Finvesta, etc. were there. So coming to the final thing, I think that competition is not very far in this segment. There are many players doing this, be it organized or unorganized, and they are providing similar or better services as well. What the differentiating factor here might be for this purple wave build? How far are they able to win more and more clients and contracts, and how well are they able to manage the working capital? So that is for it. Not decided yet on the whether to apply or not.
Understood. Thank you सचिन for this. Just a couple of questions. मैं ProFX खोल रहा था. ProFX भी डीरेट हो गया यार. ProFX को पी नहीं मिल रहा. 11 के पी पे ट्रेलिंग.
Right.
TTM 11 का पी है, तो मतलब ये भी 11 ही होगा.
Yeah, similar
So
range.
the गेन रेंज है नहीं, राइट? लाइक, एंड दूसरा क्वेश्चन, जो ये अपना आपने HNI को बोला, वो कितने पे मिला है? वो 40 रुपीज पे, एंड द IPO इज कमिंग एट 126.
Right, 46 rupees per share, and the
ओ
IPO,
वाह.
and that is happened in a span of 1 month only. क्यों ये
ओ
transfer
वाह.
नहीं?
आई समहाउ डोंट लाइक सच ट्रांजैक्शंस अ लॉट. एक मेरे को एक कंपनी आई थी, MSCL, क्या नाम था उसका, वो इवेंट्स वाली कंपनी थी यार एक, उसमें भी आई थिंक ऐसा ही कुछ ट्रांजैक्शन था.
Mac conference
हाँ, मैक कॉन्फ्रेंस, या MCEL. So
होगा I
I
think.
don't know what happens, but yeah, it just doesn't give a lot of confidence to investors. Ki what happened that the stock price was like what, 40 CR का top line, 4 का P a month before. But good. वैसे बहुत ज्यादा नहीं है, लाइक देखो ना, 98.5% तो प्रमोटर होल्डिंग है,
Mhm.
तो मतलब बहुत ही छोटा कुछ ट्रांजेक्शन हुआ है.
Around
मे बी there's
1.5%. 1.5%.
so maybe there is something which is like we don't know, किसी को देना हो stake, something like, so we'll not read too much into that per se then. In terms of peers, seems like segment को ही peer नहीं मिल रहा, right? ProFX is at 11 times, so why should this be a higher P?
Yeah.
But yeah, I think like slightly counterintuitive opinion again here. If this doesn't get fancy, maybe I think downside would be protected. I might apply a few lots just to see, but haven't really made an opinion as such yet. With that, very quickly, we'll move forward to the second company. We'll talk about Logiciel Solutions, but again, want to highlight that this is what our uh, strategies. This is no way a qualified opinion. Logiciel, incorporated in 2011, company is an outsourced software development partner delivering end-to-end custom technology solutions to startups and enterprises around the world. Its core competencies include cloud engineering, AI, ML, UI, UX design, and application development. So seems like a services company. Setting up the IPO, it's a 40 crore IPO, out of which 33 crore is a fresh issue. And इसमें, from what I was seeing, QIB was also 5% only, which was a slight red flag. We'll talk about it. In terms of the market cap is 144 crores. FY25 financials की बात करूं तो revenue 21 का है, 21 crores. PAT है 5.5 CR का. So 30 times FY25 expensive. LM की बात करूं तो LM Intellectual Corporate Advisors. Over to you, Saurabh. I think you would cover this company rather quickly if I can read it right, but over to you to talk about Logiciel.
Hi Manish, am I audible?
Yep.
Thanks, and it's actually good to be back. So Logicel, founded in 2011, they acquired their first US client in 2013. It is an offshore software development and engineering services provider Mainly they target startups and small mid businesses in the US. So their modus operandi, if you will, is like they'll get into early stage funded startups and they'll develop the POC and minimum viable product for them. And then they'll kind of grow along with the customer. So one of their big customers whom I talk a bit more about later, they've got into them at the early stage and then they got acquired by by Nexa, I think Nexa VC, Nexa Capital, which is a VC firm. And then that client grew and now it's almost 60-70% of their business. So kind of a growth hack, if you will, where they don't have to keep chasing new clients, new projects. They'll stick with one client in the early stage and grow along with them. So far it has worked for them. I think they have like a minimal sales and marketing effort. In fact, all of their sales are from referrals. So they say that they basically delight the customer with services and then hope that they get a good word of mouth publicity. That's how they work so far. But now they are planning to go for a larger, higher growth trajectory. So part of the reason for going for IPO is to set up the sales and marketing effort. I think hire 4 or 5 employees in the US and another 15-20 employees in India. Uh, so that's part of the use of the IPO proceeds. So we'll get to that also later. Currently, they have about 100 plus employees in engineering and delivery roles. So they've been around, like I said, since 2011, so almost 14 years now. In this time, they've served about 75 clients across 10 more than 10 industries. They claim that they have sticky customer engagements with about more than 5 years average customer retention. So, and there seems to be loyalty at both ends, as 15% of the employees are more than 10 years tenure. I quickly went through the reviews at Glassdoor and Ambition Box. Seems like good reviews, about 3.94 out of 5 ratings mostly. So yeah, I mean, they're doing a good job of retaining both clients and employees. So talking about the business model, so they're 100% exporting. Mostly it's from US. There's a small portion from Canada. I think there was one or two clients from UK for 24, but they seem to have lost that business. So currently only US and Canada. So most of the revenue, 85% is recurring revenue in monthly billing kind of model. So they have dedicated teams. Basically, it's like workforce augmentation. Mm. Kind of working on a retainer model. Sorry for that pause. They have about a 9% business is fixed price. 6% is like a T&M model where they'll charge based on the manner and resources that they use. They do like a markup and charge the client. So like I said, 60% business is from one client. This is probably Leap CRM, although they have not named the client specifically, but I got the sense that it is this company called Leap CRM. It was a startup that was acquired by a VC firm in 2021, and the new owners continued with Logiciel. So kind of a plus point there that they probably saw some value in Logiciel, so continued with them. They're trying to reduce the dependency on this client. So in FY24, about 70% of business was from them. In FY25 and first half of 26, it's down to about 60%. So, like I said, growth is mainly to referrals. To grow further, they need to establish some ground sales teams in North America, which the management is acknowledged. They also feel like, having offshore sales teams reduces the pricing power a bit. Because as soon as the client knows that entire setup is in India, they'll probably push them back on pricing a bit. So having some setup in the US helps in that front. So, talking about the performance cyclicity of the business, they said that second half H2 is probably better than H1. In terms of growth guidance for FY26, they mentioned 25-30% year-on-year growth. They're good. They're very healthy margins, about 40-50% EBITDA, 25-27% PAT. So in uh, FY23, they did about 14 crores revenue and 2.5 crores EBITDA, 1.3 crores PAT, which has grown to 21 crores revenue FY25 and about 5.5 crore का PAT किया है FY25 में. So PAT margins have also improved. They claim that in FY23, because of coming out of COVID, there was like huge boost in IT salaries, so they had to pay extra, and that's impacted their margins. And the next year, they were able to get the price increases from the clients, so that all got offset. So the reverse should also be true, right? Last couple of years, the salaries are not really grown that much in the IT industry, so they probably benefited from that as well. So yeah, talking about more about the P&L, employee, as expected, employee benefit expenses are biggest part of their expenses. Since most of their business is like a augmented staffing kind of thing, they'll probably hire in India and do some markup and come up with a monthly billing kind of for the client. So one of the things I noticed in the RSP in the balance sheet, there was a receivables amount of about 4.5 lakhs. So in one of the interviews, the management was asked about this also, and they claim that this was a receivable that is quite old, and instead of getting the money, they decided to get into a convertible note kind of arrangement with the customer who is about to launch the product that they developed for them. So they're hoping that there's potential to, convert that into equity, and that will help boost revenues, or probably even they can sell off that equity get a better return. So remains to be seen. Seems like a little implausible story to me, but let's see. If it would have been good if you'd know which client they're talking about, so valuation वगैरह पता चलता. But anyways. So yeah, issue size, like you said, is about 40 crores, out of which 7.2 crores is offer for sale. They're going to use 15 crores for investment in HR and product development. Capex करने वाले हैं for some physical infrastructure, about 1.8 crores. Another capex for upgrading IT infrastructure, about 4 crores. Funding for business development and marketing activities, 2.5 crores. So I would suggest listeners to go through the RHP. They've given very detailed plans for all of these expenditures. It doesn't seem something like, airy fairy. They've given it enough thought and given the details in the RHP. Worth going through it. They've done 2 pre-IPOs in mid 2024. In fact, within a month, I think, August and September 2024, they've done 2 pref issues. I think one, the adjusted issued price, adjusted for bonus shares, was about 110, and another was 160. So within a month, 50 rupees appreciation. Probably we were at the peak of the bull market at that time in unlisted space as well. So now the IPO is coming at 193 rupees. Seems like a bit higher value. PE is about 30. Forward PE would come out to be about 15. Because I think given the 25-30% growth, they do about 9 to 10 crore PAT. So at 144 crores market cap, about 14-15 ka PE hai. So maybe some juice is still left in valuation in the short term, but essentially it's a FY27 story. I think when the sales effort brings some extra revenue in, and they can grow that way, because otherwise I don't see where the growth will come from. And again, then are these margins going to sustain at that level once they start incurring these additional expenses? Will they be able to get the same price? It's something to be skeptical about. So as long as they're doing small projects, maybe the client will be okay to pay whatever markup they want getting currently, but I don't think they can grow much beyond that. So yeah, that's about it for Logiciel from my end.
Thanks, Saurabh.
I would probably not apply. I would probably not apply, but let's wait and watch for subscription and let's see.
Yeah, I'm also probably thinking of going in the same boat and not applying. लाइक वो जहाँ पे भी क्यूआई भी होता है फिर क्यूआई भी पूरा नहीं भरा होता है दैट समहाउ डजंट गिव मी कॉन्फिडेंस आई एम स्टिल ओके विद फिक्स प्राइस इश्यूज कि जहाँ पे था ही नहीं लाइक द प्रमोटर नेवर द कंपनी नेवर went the QIB route, that's still okay. But if 5%, 10%, 20% QIB, etc., is not went well for me. So we'll kind of go with that direction and not apply to this issue with respect to whatever happens. I'll skip. But yeah, thank you for covering this company. Anyways, I am somehow like I don't understand services segment, and I was talking to Rohit the other day where we were like talking about how services has absolutely no mode, like zero mode. Like logistics का भी
It's
ज्यादा mode होता है यार उससे like every player can right now just open
हाँ
a services company, right? So I don't know, like unless there is a product, I somehow don't buy it. But yeah, let's see how it evolves. Sorry.
Yeah, just one more point I forgot to mention is that promoter का शेयर भी काफी डाइल्यूट हो गया आईपीओ के बाद, अब 59% ही रहेगा. तो अगेन काफी सप्लाई रहेगा मार्केट में इसका.
Got it. With that, we'll move forward and talk about the third company. The third company we'll talk about is Invicta Diagnostics, setting up in Invicta Diagnostics, and maybe we'll pace up as well. It's half an hour already. We had to wrap up everything in 45. But they incorporated in 2021. Company trading as PC Diagnostics is a Mumbai-based diagnostic services company specializing in integrated pathology and radiology solutions. And also follows a hub and spoke model across the Mumbai metropolitan region. 28 crore का IPO है, 28 CR IPO, all of which is a fresh issue at a market cap of 107 crores. FY25 फाइनेंशियल्स की बात करूं तो 30 CR का टॉप लाइन है, 5 CR का बॉटम लाइन है. So coming at like 21 times FY25. In terms of the LM is Socrates MS. So over to you, Sachin, to talk about Invicta Diagnostics.
Am I audible?
Yep.
All right. So this Invicta Diagnostics, they were formerly an LLP and now only they have converted to this public and now coming with an IPO. So they operate under the brand of PC Diagnostics and mainly in that MMR of region, Mumbai region, and primarily they are focused into radiology services only. So host of services they provide like advanced radiology, MRI, CT, PET CT, also basic radiology, maybe ultrasound, X-ray, color Doppler, etc. And this radiology forms around 90% of the revenues. The rest is from the pathology segment, around 10%, where they do only mostly routine test only, and specialized tests are they have tie-ups with other labs in that similar region, so that they are outsourcing to other labs. This is primarily because they have devised a strategy to avoid hyper competition in that pathology space. So because pathology is basic services in the current day, so they are not going much into that pathology. Currently, they have around 7 centers. 4 are hubs and 3 are spokes. So hubs are their primary centers where they do all sorts of collection and tests are performed, etc. And spokes act as their feeders to these hubs within the limited or short distance to these hubs. So this is all located in that Mumbai region only. And for their revenue split, as I said, 190% is coming from that radiology, and they have all the top quality machines. 1.5 Tesla MRI machines is also there, and they also have 16 and 32 slice CT machines is also there. So their primary revenues is coming from these customers only. So direct to customer segment, 90% revenues, which is via walk-ins or doctor referrals. 10 to and the rest 10 to 11% is coming from this B2B and hospitals, and there are minimal government revenues, or you can say no government revenues for them. And their credit cycle or their working capital cycle to receive all these monies is around 45 to 70 days from most of their B2B clients. So their target to operate in this Mumbai region is that they're focusing on less untapped geographies or untapped areas where the patients can be captured more volumes can be captured, and there is less competition in that regions. The machines that they are getting, like all other diagnostic players, is refurbished at times, because that helps to save them cost, because around 40 to 50% cost gets saved in getting refurbished machines, whereas the life of the machines are similar, be it the refurbished one or be it the new one. For the current utilization across all centers, be it mature or some new ones, around 75 to 80% is their utilization rate. And they say that after a asset turnover of around 1.5 to 1.6 times, they are saying that their centers are getting matured. So around 40 to 50% centers come in that category, and the rest are slowly scaling up. Minimum debt for them at the current stage, and they are also saying that we are avoiding this low margin B2B business, TPA का business हो गया या health checkups हो गए, which gives volumes at times, but उसमें competition is already there, so and margins are very less. Rather they are focusing on this radiology segment only, where they are not going by the cheapest service provider, but maintaining their price and maintaining quality as well. Now coming to their financials in FY23, where they were largely standalone, so not very much significance to these financials compared to what they did in FY24 and FY25, where they acquired some other entities to consolidate their operations, where in FY24 they did around 15 CR of revenues with around 23% of PAT margin, and EBITDA was north of 35%. In FY24, in FY25, sorry, the consolidation effects get more streamlined, and the revenues picked up to around 30 CR, and the similar EBITDA range, and the PAT margin uh, came to near 17%. Now, why the PAT margin declined was because they are getting new machines and taking new acquisitions as well. So their depreciation is quite high. The conversion from EBITDA to this PAT is very less for them because of higher depreciation. They have also given numbers for H1 FY26 as well, where they did around 17 CR of revenues with near 4 CR of PAT. They said that their H1 to H2 split is almost even, with the first half being higher at times due to better monsoon. जैसे इस साल there was a better monsoon, so they got more volumes in the first half of the year. More number of tests were performed, and the pricing was also better, as we saw in the H1 of this FY26. Going forward, they are trying to add more number of hubs, in the Mumbai region, as well as expand beyond Mumbai to deconcentrate from this Mumbai region only. And they are also focusing to increase their test time, like the test turnout time. You can say that the reports are dispatched faster, and also they are trying to reduce their MRI and CT times as well. And they also did some pre-IPO, which I will come on to that later, and the pre-IPO was primarily to fund more acquisitions. Now, some risks that I told, that high depreciation is a risk for them, that will slowly get stabilized, but for now, since they are procuring more machines and making new acquisitions as well, and making new centers as well, so depreciation will be high in the start. Also, their geographical concentration in this Mumbai region only, where we already have many players like Aarti hai, Vijaya, etc. as well, is also there. We have hospitals also, Apollo ho gaya, and we also have these private funded players, Pharmacy, Tata NMG, Healthians, etc. They are also present here as well. So competition is very high in that region. Now, coming to the IPO pricing, and first the fund usage. So around 21 CR is for these new centers. Around 5 new centers they are planning in that Mumbai region and outside of MMR region as well, where they say that we will make these new centers, and they are looking to break even in around 12 to 18 months, and they are fully looking to recover the center's cost, which comes to around 4 CR to 5 CR per center, to recover in around 24 months, 24 to 36 months they are saying to recover. Now, coming to the pricing, if you look at FY25, it's near 21 times, around 21 times. And given the annualized FY26, which is expected on the first half financials, it is probably near 14 to 15 times. Given that we are already into 9 months of FY26, so 14 times should be the ideal valuation. They did some pre-IPO around 6 months back from the current date, which was around 15 to 16% less than this IPO price. That included names like Sapphire Capital. Some people from Sapphire Capital was there. Growbiz Fund was also there. Sandeep Singh, Khushbu Nar, etc. Some these Sachin and I was also there. We recently there was news that Manish Grover also took some stake in this Invicta Diagnostics. Lead manager is Socrates MS. Not so good record in the past, but let's see if they are able to do well this time. Anchor list, we saw that Holani is present, Rajasthan Global, Avora Fund from Kolkata is also present here. Now, coming to the final thing, I think that being focused on radiology is good because that is high margin compared to that pathology. Also, they have minimal B2G, so उनका working capital cycle is better and पैसा फंसता नहीं है, so that is one advantage as well, which was not an advantage to that recently came Star Imaging. So उसमें this B2G segment issue was pertinent, which is one reason why it is still trading at low valuation probably. Chandan was also one peer that has a good parentage and also has that hospital and pharmacy business as well. So that trades near 30 times, whereas this Star Imaging trades near 12 to 13 times. So I think that this Invicta should trade somewhere in between both of these two. At least the promoter I felt that was better than the last Star Imaging one. This is my personal opinion. So for now, I would probably think of applying to this. I find it better than that purple and this Logiciel. But this business needs time to scale up because they are doing lots of investment acquisition. So stabilization is needed and time is also needed. So that's all.
Got it. Thank you. Thank you, Sachin, for this review. I would also be applying to the company. Seems like a well-run issue. And again, like, want to highlight one thing. Like, whenever, look at the pre-IPO list. There was one recent pre-IPO, which was also linked with Chandan and that tended to move the share. So I think downside protected रहेगा IPO price पे. So I would be applying to the issue and then probably seeing, although the story will take time. It's a, like the company is very small right now. The company is doing a top line of 30 CR. So, would take time. And again, there are a lot of your radiology centers as well, which are coming up. So would be interesting to see how it evolves, but I'm sure, like, I think the downside should be protected. So with that thought, I would be applying to the issue and then also maybe I don't mind holding a lot here or there in order to see how it performs for the long term. That is what I would be doing on Invicta. But yeah, with that, let me move forward and talk about the fourth company. The fourth company we'll be discussing is Ravel Care Limited. Just setting up Ravel Care, incorporated in 2018. Company is a digital BPC, beauty and personal care brand offering uh, comprehensive range of hair care, skin care, body care, and scalp care products tailored to individual needs. Uh, with its focus on personalization and digital innovation, company positions itself as a modern data-driven BPC brand. बात करते हैं इसके बारे में क्या, I'll be covering the company, but yeah, uh, um, setting up the IPO, it's a 24 crore IPO, all of which is a fresh issue. 89 crore MCAP पे आ रही है. So 26% dilution. FY25 financials की बात करूं तो revenue 25 crores का है. So छोटा सा raise है, 25 crores top line, PAT 5.3 CR. In terms of the LM is Marwadi Chandrana Capital intermediaries. So that is with respect to the company. ये company हमने IPO में review, like we have also done a Know Your Promoter series where we spoke with Ayush. So if you haven't followed the company yet, go ahead and, like, if you haven't heard, you can listen to that on our YouTube. The link is in the pinned comments. उसके अलावा हमने Instagram पे भी डाला है the experience of Shark Tank. So a lot of people would already know the company simply because it had came on Shark Tank in the second season. But just to highlight what the company does. So at a high level, the company is in the BPC, beauty and personal care segment, which is a very good segment to right now, simply because your COGS is very low, like 10-15% COGS hota hai. Then there is a your then there is a marketing etc cost which you are where you are running all these performance marketing campaigns etc, and then rest everything is flowing down to your bottom line. So it's a very high gross margin business, which is a good business, and that is why it's also heavily liked by this D2C space has picked up a lot of traction also. But it also means that there are quite a few players in the market, and it is difficult to uh, differentiate yourself. This company Ravel was able to differentiate itself from the peer group in the beginning simply because it had went on Shark Tank, and now it's also getting listed. So that is one advantage. The promoter is tenacious and probably slightly ahead of the curve in terms of how he's taking decisions. But let me talk about what the company does. So basically, the USP for the company is that they don't sell you pre-mixed shampoos. They customize the shampoo according to, and again, shampoo is one category, but major category hair care is where the 92% of business is coming from. And they customize your shampoo basis what your problem is. Let's say your hair is wavy or curled or whatever. And again, I'm not expert in this, but yeah. So they'll have a different shampoo for each of the category. Like someone with thin hair will have a different shampoo customization than a thick hair customization. So they say that they are data driven, and then people fill this survey, and then basis that they send them like this is what the shampoo is what you should be using, and then they book that, then they take that survey. But by definition, this means that this can only be done from their website, simply because if you're selling on a e-commerce website or a quick commerce, you will have to sell SKU, quick QSR SKUs, which can just be sold as is. And there's no room for customization simply because no company as big as let's say Amazon or Blinkit would customize their product form, their page for you to fill in these things. So, which also means that there is some concern of scalability, that this business by definition cannot grow forever simply because there are only so many people who want to customize their shampoos. But their branding, their packaging is pretty good. They have like the shampoos have names for like for Manish or whatever. You can write the name in which the shampoo will come for. So that's good. I am assuming they have a loyal customer base because of that. And that also shows like 36% of customers are essentially repeat, like one out of every three orders has already ordered from them in the past. So एक बार तुम्हारा customer acquisition cost जो लग गया उसके बाद your LTV would essentially become positive, and they are a cash positive company as well. There are a lot of companies, because performance marketing is very very difficult to get customers, is very 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 difficult, and like especially with all this meta and like how they change rules every day, you don't know कि कल कौन सी campaign चलेगी कौन सी नहीं चलेगी, right? So but they have found a niche. The good part is like they have a revenue. The difficult part is growth. Like FY24, they had done 25 CR top line. Wait, let me quickly open the numbers. Yeah, FY24, they had done 22 CR of top line. This is after the Shark Tank virality. FY25, they did 25 CR, so around 10% growth. And then in FY26, they are again slotted to do somewhere around, in 6 months, they have done 14.5, so should close around 29 if you just roughly annualize it. But yeah, and it's a true D2C brand. You have sales from across India and then some test orders from outside of India as well. But the thing is, like, growth is rather slow for the speed, and that's also because the scalability is an issue, right? Like, you can't keep customizing your bottle for this. The promoter is now saying that they want to move to a Ravel Pro sort of a mix, which would essentially be a product which is available on quick commerce, etc., and is then sold through it. But then it's an untested segment. Like the company hasn't sold any Revel Pro. If it was there was let's say a 10 CR worth of sales of Revel Pro, and then the IPO was to take up that sales from 10 CR to 50 CR, that would have been a lot more comforting. Because simply because you are now like getting into a new segment, and as I said, performance marketing can be brutal. You really don't know what will work, what will not work, and it can take down your profitability as well if it doesn't work. So that's a challenge with the business. But at least in terms of if you look at the current business, that is how it looks like. The company has consistently generated bottom line, 5 CR bottom line in FY24, 5.3 in FY25, and should close slotted to close at somewhere around 6.4 if you just annualize the FY26 numbers. So basis on that is coming rather cheap, like it's coming 17 times FY25 and 15 times FY26. Um, So it's okayish valued. There is value left on the table in terms of what they want to do from the IPO proceeds. Like it's a smallish IPO, as I said. It's a 24 CR IPO. 8 CR is for raising a contract manufacturing facility. So right now they manufacture everything through contract manufacturing. They want to backward integrate and have their own manufacturing facility in Amravati where the company is based. One thing to note there, I was reading that the land is on lease, and the promoter groups, like the land seems to be on the name of promoter group as well, and then is leased there. I couldn't find the amount of lease, but I'm assuming it would be arm's length transaction, so that should be okay. And having done that, like the contract manufacturing would then shift in house, and once that is done, that should also increase some of the margin simply because your costs will further go down, and then they want to spend some 11.5 CR on performance marketing, I'm assuming, of this Revel Pro product, although Revel Pro is not mentioned anywhere as such. That is just in the DRHP, but that's where they have already said that they have started selling some of the products on Blinkit, etc. I'm assuming on Blinkit and Amazon, this will be the product they will be selling right now. Talking about the peers, it's coming at, like, let's say, I don't know, they have said they don't have any listed peer, which is also true. Like if you think of it, Honasa is one good D2C brand which you can think of. Mamaearth, like Mamaearth trades at somewhere around 4.5 times sales. This guy is coming at 3.5 times sales. So has left some space on the table for sure, 25%. But again, like Honasa, Mamaearth essentially is an established brand, so there's no key man risk there. Plus also it's a well diversified business. This one is relying on one product, so that is one risk. But again, if the other business does well, your Revel Pro does well, then if that can grow, the market will love it. So it all comes down to growth and sustainable growth. If it can continue to grow, it would be a very good business. But it is a punt at this moment of time simply because the new product is not tested and the current product has reached its cap, or if it hasn't reached its cap, it will reach its cap soon. So that is with respect to the company Ravelcare. In terms of the anchor list was good. A couple of names to NAV Capital took like around half of the anchor book. Again, a very smallish anchor book, 387 CR of anchor book, out of which 2.8 CR was with NAV Capital. One interesting name was Lighthouse Canton, which is a PE fund, and like they have a Lighthouse Canton Special Opportunities Fund which has taken stake. Then there is a couple more funds per se. So interesting anchor book. I feel they have at least left 20-25% space on the table because it's coming at 3.5 times sales. Market would take it to 5 times sales is what my rough guess is. I would definitely be applying. I think it would be tough to get allotment in this one simply because of the smallish raise. But yeah, let's see. I would be applying to this issue. That is with respect to Ravel Care. We have already covered the company on our YouTube channel as well as on our Instagram. So if you haven't seen it, go ahead and you can see it there as well. With that, maybe I see one more comment where Abhishek has mentioned with respect to Invicta. Invicta seems decent value, I think, has been left on the table, should trade at 11 times EV EBITDA. Will share my DCF soon. Thanks. Yeah, so sorry, I got confused, but yeah, that was with respect to Ravelcare. With that, we'll kind of move forward and talk about one last company for the day. And meanwhile, if you have any questions with respect to the companies that we are covering, go ahead and please post them in the chat box as well. We'll take them. The last company for the day is Exato Technologies. This is again covered on our YouTube channel. I'll post the YouTube link as well. Just setting up the company. Incorporated in 2016, company is a customer transformation partner providing technology-driven solutions that enhance customer engagement and operational efficiency. It offers a broad range of services including CX and analytics, unified communication and infrastructure, and Exato IQ to BFSI, ITES, retail, healthcare clients, etc. So it's an analytics play. Whenever we call customer care, तो उसमें जो कस्टमर केयर पे फोन करते हैं तो जो रिकॉर्ड होती है पूरी कॉल उस पे एनालिटिक्स करती है ये कंपनी की. हाउ कैन यू सर्व द कस्टमर बेटर, व्हाट इज हिज नीड्स, एक्सेट्रा. In terms of IPO, again, very small IPO, 27.5 CR. 37.5, if I'm not wrong. Let me just quickly see how big is the IPO. But I think 37.5 CR IPO, out of which 30 CR is a fixed fresh issue, and remaining is OFS. Yeah, 37.5, out of which 30 is fixed. I had written 27 wrongly. 37.5 का है, market cap 141 crores है. FY25 financials की बात करूं तो revenue 126 crore and PAT 9.75 crores है. So 15 times FY25 पे आ रहा है company, and in terms of the LM is GYR Capital. So I would be posting the YouTube video of our Know Your Promoter series in the chat, Abhi, for you to have a look at. But yeah, over to you, Sachin, to talk about Exato.
All right. So this Exato Technologies, they are incorporated in 2016, and what they are doing is they are a tech company which builds these AI-based solutions and software equipment tools, and they help these big business like banks हो गए and BPOs हो गए to manage their customer interactions better in a more efficient way. So what they do in simple languages, they analyze these customer interactions like phones, calls, messages using different types of tools. They also incorporate artificial intelligence in this, and then they give advice to these business B2B clients, like where to improve the service, how to handle the request on automated basis, which products to sell, which things to market, etc. So for supplying all of these tools and equipments, they have tie-ups with big tech firms from the global space, and NICE is one, Mitel is also one, which then they use them, and they use the licenses of these big tech firms to supply their services and their products. So also they do some tweaks in between, so that helps to get them more business and more margins. They also offer services as well for in between all of these offerings that they are giving. They also offer services where they charge for the setup, training, and maintenance of all of these tools and software equipment as well. Also they offer some migration from old setups to new cloud based setups, monitoring of old systems for their clients as well. So all of that comes into the services part. Some of the after these services, there comes the maintenance part, which is their recurring part also for the revenues, which is around 50 to 55% in the current state of the total revenues, where they have long-term tie-ups and relationships with their clients for all of their tools and analytics that they are supplying. They are also trying to develop one of their own product, a small part of their revenues currently, around 5 to 6% only. Exato IQ is it's called, which will help to help in the compliance of these clients for with all laws and regulations, and that will also help to automate their workflow. Like जो भी उनका customer का interaction हो रहा है, they are able to automate that and manage it better. So, and this Exato IQ is in active deployment currently, but is small, only around 5 to 6% currently, but has the potential to scale up as and when the company gets more clients and onboards more clients for this Exato IQ. For the revenue segments around this customer experience and analytics, that is around 70 to 71% of the revenues, and the rest is from this communication and tools for this communication and infrastructure thing. The promoter here, Mr. Apur Sinha, he already has prior experience from this TCS ho gaya, Wipro also he has worked around 20 plus years of experience he is bringing in. So what he's saying that we are focusing mainly on this consulting thing, because in COVID their business was badly hit. So for consulting thing they are mainly focusing, because that brings stability, more recurring revenue as well, and they are able to get higher retention from their clients, and they are also able to upsell and cross sell more products and services as well. They have around 150 plus clients in various industries. Banking sector gets around 37% of the revenues. Telecom etc. is around 1 to 2%. Retail chains, big retail players, that is around 6 to 7%. And there are other IT companies, which is the majority portion of their revenues, around 55%. This is as per the RHP that is given. They also are operating apart from India as well. India is around 76% of the revenues, and the rest 24% is coming from various countries like USA, UK, some Spain as well, Singapore as well. Where they are in Singapore, they also have one subsidiary that will bring in more clients from international base to this Exato India entity. What they're saying that they are having around unexecuted order book also around for 2 to 3 years from now, around 350 CR plus orders which are yet to be executed. So that should help in the top line going forward. Now coming to their financials, in FY23 they did 73 CR of revenue with 8.5% EBITDA. In FY24 they got a good jump to 114 CR of revenues with similar EBITDA. Because in FY24 they got a big order from one of their clients from US, so that was a main contributor to this jump of FY24. In FY25 the revenues didn't grow much, only 124 CR from 114 CR earlier, and the PAT margin was around 13% EBITDA margin and around 8% PAT margin, because that one-time order was not there in this case, and they only relied on this recurring revenue, so growth was not much. Coming to the 6 months of FY26, they have done around 72 CR of revenues with 7.2 CR of PAT, so around 10% PAT margin. Going forward, they are saying that we will scale this international business more to boost margins, because higher margins and higher pricing they are getting from international business, and they will also increase their investment into this Exato IQ, more research and development. Some around 90 to 20 CR of intangibles are already, we can see in the balance sheet, that are in development, so that will be there for their proprietary Exato IQ, and by this they are looking to scale this Exato IQ to around 30 to 35% of their revenues, not immediately but in medium term from the current 5% of their revenues. Now coming to some risk for this business, working capital is a risk. The cash flows have been negative, sometimes up, sometimes down. Also, some receivables for more than 6 to 7 CR are pending for more than 6 months. They did not specify the working capital cycle exactly, but we can see that these receivables are pending for quite a while now. Also, they say that even though their attrition is low, around 8-9% only, but they are not able to get more talent in this customer experience area. So for that only they are deploying more tools and these softwares from the overseas partners like NICE and Mittel. Now coming to the IPO usage, apart from the OFS, 16 CR is for this working capital, and another 7 CR is for a new product development, where they are building one contact center as a service, CSAS, if we can say, for these small and medium enterprises, because these medium enterprises do not have a much significant IT budget, so they are building for these enterprises at lower pricing to get more clients onboarded on their proprietary tech. Also, they are incorporating some more services and AI enhancement in this segment also from their product, so that should come live in probably 1 to 1.5 years time, and the rest 2.5 CR is for loan repayment. Now coming to the pricing, it's near 15 times FY25 and probably near 10 to 11 times FY26, but FY26 is getting benefited from that low base of FY25, so that is one point to note. Lead manager is GYR, good reputation in the market. Pre-IPO has that factor already embedded. Mr. Vijay Kedia is there in the pre-IPO, as well as in the entire anchor book is also taken by them via Mr. Vijay Kedia and that 9 Alps fund. Now for the final thing, I think that in the short term this template of this IPO feels very similar to that recent TechD cyber security, although the underlying business might vary via operations that is more into cyber security, and these are supplying more to this KPO and BPO stuff, but the template feels similar. Also, the valuation for FY26 is being factored by all of these surrounding factors for this company, Mr. Ken, etc. So at times it feels like the traditional IT thing only, but they have their advantage of more softwares, more embedded services, more tools, etc. So that is giving them some value addition. For FY27, if they can replicate this FY26 performance, then it's good, but that needs time for evaluation. So that will come post listing only, and probably mostly everyone is applying to this already without listening to this review only. So that is all.
Yeah, that is the slight conundrum on this one. But yeah, I'll kind of mention that I don't like this industry that much, simply because it's ripe for disruption. Simply because what they're doing is they're recording your calls, right? And then उस पे analytics कर रहे हैं. But with AI coming in, how many calls will be there is up for question, right? So in the long term, it's very important how to see how they like evolve out of this. But yeah, having said that, in the short term, there's absolutely no risk. Um, in the long term, we'll have to see how they evolve. Having said that, the promoters very sorted and gave a lot of answers which were comforting. So go ahead and listen to the Know Your Promoter series as well, and then basis that take a call. I'll definitely be applying to this issue and hoping to get allotment. But yeah, that is with respect to today. What we have done is we have covered 5 SMEs. We have still left a few. We have left like clear, secured or something. And then a couple more. We'll try and do some more in the second part too. But yeah, if we leave some there's no sorting order, etc. It's just that we only have so much time to cover the company. So what we'll do is we'll probably do one more space on Tuesday or Wednesday. In that space, we'll cover three massive companies. There is Misho, which needs to be covered, which is super exciting. Then there is Equus. Then there is Vidya Wires, and then we'll also cover Neocam on the SME side, and then see if we have to cover anything else if required. But yeah, that is with respect to today's episode. We hope we'll see you back in the middle of the week. And again, this is us like we for the last 3 weeks we had been doing a space on Monday, and people had started saying Sombar investing instead of Sunday investing. So I got everyone together, even with a half team on Sunday, to at least complete half of the issues today, and then sometime middle of the week we'll do the remaining three. And अभी time भी है Misho Equus with the Avayas, man. That would be an interesting space. But yeah, good to do this on a Sunday and talk to you, all of you, and especially good to see 200 people attending SME space. Very interesting. Next week should be full of IPOs, so we'll give opportunities, etc. as well. We'll see how it evolves. But then thank you so much for talking to us today, like for listening to us, and then we'll see you back again in middle of the week. In the meanwhile, if you haven't followed this channel, go ahead and follow Sunday Investing on Twitter as well. Show some love. Thank you everyone. Bye.
Thank you, everyone.